Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you need to keep on your radar today. Let's get started with an eye on the globe and see how the US markets fared overnight. And it was a rather negative day coming in for the US markets. They were dragged down by losses in key artificial intelligence names. Now, overnight, the S&P 500 slipped about 0.1%. That's after giving up early gains. The Dow also edged slightly lower, whereas the Nasdaq Composite that fell more than 0.5%. As underperforming tech stocks, they saw renewed selling pressure. If we talk about individual stocks, Broadcom dropped about 5.6%, ServiceNow tumbled 11.5%, and Oracle that fell more than 2.7%. Other than that, Microsoft that also closed lower. This as investors continue to take profits in the high-flying AI names and rotate it into other parts of the market that includes healthcare and utilities as well. Now, despite the decline and the broader market trend, that remains positive with the US stocks still on track for a winning year. Now, market leadership that is beginning to broaden with industrials, financials, consumer discretionary and materials, all of these sectors showing improving momentum. So yes, that's how the market is looking, shaping up. Srishti, pretty negative days what we saw yesterday, a negative start to the week, but the broader trend seems to be positive.
All right, so that's about the US markets, but interesting moves when it comes to the commodity world as well, because it's the crude that has been under pressure for quite some time now, and yet again crude is seen to be dropping to the early 2021 levels. Is the low oversupply concerns that is seen to be outweighing the geopolitical risk. Now, as of now, Brent oil is trading and hovering around that $60 per barrel mark with a bit of a negative bias. Now, along with that, it's the natural gas prices that extends the losses for the third straight session. For now, with respect to gold, that is seen to be trading absolutely flat. But overnight, when it comes to the silver prices, we have already seen a jump of 2%. And even today, silver is gaining and trading with a gains of almost 0.5%.
All right, so that's all about commodities, but let's get started and tell you all of the top global stories that we are tracking this morning. And first up, the latest on tariffs. Now, Trump is yet again doubling down on tariffs as both an economic and national security tool. Now, claiming that markets have hit repeated record highs, Trump said that tariffs have driven wealth back into the U.S. and pushed chip makers, especially from Taiwan, to shift to manufacturing stateside. Now, he argued that the strategy has strengthened supply chains, boosted domestic production, and enhanced national security as well, and has called the past 10 months unprecedented in economic gains. Let's take a look at what he had to say.
We've had the greatest stock market in history, Brian. We have a stock market that's gone up 52 times to new highs during a 10-month period, my 10 months. My first 10 months, we set a record. 52 days, we had the highest stock market in history, including a day ago. And I didn't look today. Maybe it's up today, I don't know. But we had 52 altogether, and there's never been anything like it. And the reason are the tariffs have brought vast amounts of wealth into our country. That countries that have taken our car companies, those car companies are all coming back. The AI is coming at levels that nobody's ever seen before.
All right, but Donald Trump has escalated America's drug war, formally branding fentanyl a weapon of mass destruction. Now, the executive order hands the Pentagon and intelligence agencies expanded powers against drug traffickers, treating fentanyl less as a public health crisis and more as a national security threat. The move builds on Trump's designation of cartels as terror groups and follows deadly U.S. strikes on suspected drug vessels action. Legal experts say that this may stretch across the law.
That's why today I'm taking one more step to protect Americans from the scourge of deadly fentanyl flooding into our country. With this historic executive order I will sign today, we're formally classifying fentanyl as a weapon of mass destruction, which is what it is. No bomb does what this is doing. 200 to 300,000 people die every year that we know of. So we're formally classifying fentanyl as a weapon of mass destruction.
All right, so that's the latest coming from Trump. But let's get to you more. Now, Elon Musk has shattered another wealth record. Forbes says that Musk's net worth has crossed $600 billion, driven by plans for a SpaceX IPO that could value the rocket maker at $800 billion. Now, Musk's 42% stake alone could add over $160 billion to his fortune. Tesla shares, they've also climbed, helped by progress on robotaxis, while XAI is reportedly raising fresh capital at a $230 billion valuation.
Wall Street is moving closer to near 24/7 market. Now, Nasdaq plans to file with the SEC to extend stock trading to 23 hours a day, 5 days a week, citing surging global demand for the U.S. equities. The shift would put Nasdaq alongside the NYSE and CBOE, which are also pushing round-the-clock trading, and if approved, non-stop trading could launch in late 2026.
Moving on, days after U.S. delegation's visit to India to negotiate the much-awaited trade deal between the two countries, government sources have said that India has refused to open market for U.S. agricultural products in the trade deal.
And days after Mexico levied steep tariffs ranging from 5 to 50%, Commerce Ministry has confirmed that India is engaged with Mexico for talks on preferential trade agreement. Now, these discussions were initiated on December 12th. Let me take it across to my colleague Sumita, who is here with more details. Sumita.
That's right. India is engaged with Mexico as far as a trade deal or a preferential trade agreement with the country is concerned. Remember, this is after Mexico has decided to levy higher tariffs on countries with which it does not have an FTA or a PTA. And this kicks into effect from January 1st, 2026. Remember, Mexico had first introduced the proposal in September to support local production, but then the country ended up deferring it. In September, India had sought special concessions to shield its exports and exporters from new tariffs. However, that proposal was brought back just a couple of days back once again. And now India's Commerce Secretary Rajesh Agarwal has stated that India will be entering into a PTA or a preferential trade agreement with Mexico. Discussions on the matter started on December 12th, and technical teams are discussing. They are engaged on timelines that need to be considered for a preferential trade agreement with Mexico. In fact, these tariffs have been increased on an MFN basis, and these are very well within the WTO framework, is essentially what the Commerce Secretary also stated, and that these tariffs are not targeted at India. These are measures which are part of a wider trade policy response. That's the communication that the Indian government has gotten from the Mexican government. However, there is limited recourse under WTO rules, even though these tariffs may not be targeted at India, and which is why India will be working out a PTA with Mexico. Now, we've also been given to understand by the Commerce Secretary that Indian supply chains are quite tightly integrated with Mexican supply chains, given the fact that there are 200 Indian companies that are invested in Mexico. And tariffs will impact $2 billion of India's exports in different categories, most importantly in auto components, textiles, iron, steel, plastics, and leather. Overall trade between Mexico and India stands at $8.7 billion. So this is a crucial development that's coming in, especially after last week. We were given to understand that auto industry had approached the Commerce Ministry to have an intervention and get the Mexican government to maintain status quo so that these tariffs are not going to have a massive impact on India's auto industry.
All right, thank you, Sumita, for getting us all of those details. But time now to take a very short break. We'll be right back with more news and updates on the other side. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and Srishti Sharma. And it's time now to take a look at how the Asia Pacific markets have opened up this morning. And it's a rather mixed day coming in. Let's start and see how the Asia markets are faring. Now, China's index, that's down nearly 0.8%. 3,836 is where the index is trading. Hong Kong's Hang Seng index, that's also trading nearly 1% lower, just managing to hold on to that 25,370 level. Apart from that, Japan's Nikkei, that also trading more than 1% lower. Deep cuts over there, 49,560. That's the level that Japan's Nikkei is managing to hold on to. But yes, a rather down day coming in for the Asia markets as well. That's after a weak start that we saw for the week as far as the Wall Street is concerned. Now, if you talk about ASX 200, Australia's index, that's the only one that's managing to hold on to the green. Absolutely flat moves, but just at least holding on to that shade of green. 8,646 is the level where ASX 200 is trading. South Korea's Kospi, that's also trading more than a percent lower. 4,000 is the level that it has managed to hold on to. So yes, rather negative moves coming in for the Asia Pacific markets. And let's see what's penciled in for the Nifty. So yesterday we closed just above 26,000. Ended absolutely on a flat note, but yes, at least managed to hold on to that 26,000 level that we saw after a recovery that we saw in the latter half of the day. So yes, managing to hold on to that level, and the Nifty implied open, however, is suggesting cuts of about 80 points at the start. So yet, after the weak global cues, we are penciling in a start in the red for the Indian markets as well.
All right, so that's about the Asia check. But with this, let's tell you which are some of the stocks that you should be watching out for in today's trading session. And firstly, let me take it across to Ishika, who's standing by with a list of counters to be washed out today. Good morning, Ishika.
Good morning. So right, some of the stocks in spotlight today are, first we have Delivery. It has launched an on-demand intra-city shipping app via the Delivery Direct app in Mumbai as well as Hyderabad for SMEs, D2C brands as well as individuals. Now this expands an addressable market and also aids in revenue diversification. Next up, we also have GMR Airport. Its November numbers are out. Its passenger traffic rose 7.4% year-on-year to 11.07 lakh in November, and aircraft movements also increased 7.9% year-on-year to approximately 66,000. Now, this sustained traffic growth improves revenue visibility as well as strengthens cash flow outlook. We also have Arvind Smart Spaces in news. It has acquired a new residential project in Bangalore with an estimated top-line potential of 550 crores. This strengthens the company's medium-term launch pipeline. We also have HCL Technologies in spotlight. Now, it has expanded its digital transformation partnership with Orobay Technologies to manage global SAP and Siemens Team Center PLM systems using HCL Tech's AI Force platform. Now, this deepens client engagement in high stickiness systems, right? And also supports AI-led deal momentum. We also have Intellect Design Arena in spotlight. Now, it has signed agreements with 35 Canadian credit unions, strengthening its North American presence. Right, we also have BL Kashyap and Sons. Last but not the least, it is in news for securing a domestic construction order worth 615 crores, right? And the size of this order is quite high as compared to its market capital. There we go, back to you.
Thanks, Ishika, for taking us through all of those stocks that are going to be in focus today. But that's not all. We also have a couple of other stocks that will be in the focus. And let's start with Newgen Software. Now, some of these names are going to be in focus on the back of new order wins. And one of them is Newgen Software. Domestic purchase order is what it has received from a leading Indian bank. It's a 16.5 crore rupees order. So this is going to be in focus. We'll watch out for how the stock reacts to this order win. ION Exchange, that's also going to be in focus on the back of a new order win. It has secured contracts from Raisin Energy and Inox Solar. It's worth 205 crore rupees. So a big order win coming for ION Exchange. So we'll watch out for how the stock reacts to it. Next up, let's put some healthcare and pharma names on the spotlight. And first up, let's start with KIMS. Now, KIMS is going to be in focus because KIMS Hospital Bengaluru has commenced operations of a new facility that's 350 bedded. It's MTC Hospital located at PES University campus in Electronic City. So yes, a new campus, new facility coming up for KIMS. So we'll wait for how the stock reacts to this latest commencement. Next up, let's talk about Zydus Life. Now, this one is going to be in focus because its subsidiary, Sentinel Therapeutics, that has received an FDA acceptance for Catex 101 NDA resubmissions. Now, this new PD UFA date, that has been set for January 14th, 2026, that is. Now, remember, this treats Menkes disease. It's a rare pediatric genetic disorder. So, yes, a very positive development coming in for this company, Zydus Life. We'll watch out for this stock as well. And lastly, there's Lemon Tree Hotels. This one has signed a license agreement for a new 80-room property in Bandipur, Nepal. So yes, big development over there as well. So some of the counters will be watching out for on the back of news developments as well as order wins.
All right, so let's watch out for these stocks. But with this, it's time now to slip into a very short break in this edition of Market Cafe. Don't go anywhere. We'll be right back on the other side. Welcome back to Market Cafe right here on ET Now, and it's India's trade data for the month of November that is out, and India recorded exports worth $38.13 billion, which is highest in the past 10 years for the month of November. Now, trade deficit for November comes in at a 5-month low of $24.53 billion. Sumita Karir joins in as she breaks down the numbers for us. Take it away, Sumita.
That's right. India's merchandise trade deficit has declined to a 5-month low of $24.53 billion for the month of November. This was driven by a fall in gold, oil and coal imports, while exports to the US have picked up. So that's some good news. It's coming in on the trade front. And this is what government data shows. Remember, economists had expected the November trade deficit to be $32 billion as compared to a record deficit of $41.68 billion in the previous month. Speaking of overall merchandise exports, well, they have risen to $38.13 billion in November from $34.38 billion for the month of October, while imports have fallen to $62.66 billion from $76.06 billion. And this growth in exports has been driven by engineering, electronics goods, gems and jewelry, and petroleum. In fact, if we speak about geographies that have aided exports for India for the month of November, it includes the United States, like I said, the Netherlands, the UAE, and China. Now, speaking of the US, India's merchandise exports to the US have risen nearly 10% month on month for the month of November, and India has held fort as far as US exports are concerned despite the tariff situation. In fact, Rajesh Agarwal said that during a briefing, he also added that the decline in imports was due to a fall in gold, oil and coal imports. Speaking about the trade deal and the developments as far as talks between the two sides are concerned, well, we're given to understand that a framework deal is being discussed to address reciprocal tariffs. And of course, India has taken the deputy USTR who came to India. He's taken stock of trade relations, and a framework deal can be done within a short period of time. But India will not like to put a deadline, even though both sides are looking at a closure. But eventually, it's the principals who need to take a call on that.
All right, so that's all about macro data. Thanks, Sumita, for taking us through all of that. But let's move on and tell you the latest on BKG Foods. Now, Deepak Agarwal, the MD of BKG Foods International, discussed with us the impact of recent GST cuts on the company's sales, and also he touched upon their expectations from the upcoming 2026 budget. Let's listen into a slice of that conversation.
The consumer is benefiting, and we are seeing that in long terms, definitely it will, gives a benefit to the consumers and as well as to the sales. The ingredient prices, is not increasing. So this is the, most beneficial things to the consumers and to us, to all the manufacturers, that, the prices are controlled by the government, and due to the GST, the prices is not increasing.
I want to speak specifically about Bikaji and the expansion that is happening. You recently did a bunch of investment in the US. What are the other international markets that you're looking to expand in? Are you looking at further investments in US as well?
See, in US we have just opened a subsidiary, company, and US and Canada are the biggest market. And nowadays, we are seeing that, the tariff has been increased by the Trump, and the logistic cost and the supply cost has been increased. So we are maybe in future, in upcoming future, we can start manufacturing in US as well as in other international markets. But right now we are only focusing on the C&F system and into the exports and to the distribution in the international markets. But yes, I'm seeing that in next 3 to 5 years, we will start manufacturing as well.
And in an exclusive conversation with our colleague Anjali Palod, Godrej Consumer MD and CEO Sudhir Sitapati says most price cuts have already reached consumers and GST-related disruptions are behind the sector. But whether the consumption boost is structural is still unclear. Let's listen in.
I think the GST changes have been quite dramatic, and I think as we discussed in the conference, most companies seem to be very optimistic. I think the disruptions are behind us, and I think most of the price drops have reached consumers. I think most of us feel, and I think the general mood in the room is that perhaps FMCG will have a couple of good quarters, if not a couple of good years, thanks to both GST and a couple of other interventions that the government has made.
Right. And when it comes to the impact, so while we've seen the pricing changes happen, the larger goal with the GST rationalization is also to boost consumption, which, is supposed to boost FMCG sales as well. How much of that are you seeing? Any particular trends that are coming out? Any demographics that are seeing a larger impact?
I think it's very early to say what's going to happen to consumption because we're looking at a previous quarter that was disrupted, so some pipeline changes here, there. But I think along with GST, we've had an income tax cut earlier this year. We've also had a reduction in the interest rates, which again boosts consumptions. So there is very little reason that consumption shouldn't see a pretty sharp boost in the next few quarters. This quarter also you may, but it's still too soon to see to say whether it's structural or short term. But it's probably going to be structural. We'll probably know in a quarter or two.
Finally, we have the budget 2026 coming up for the FMCG sector broadly. There have been two big announcements for the sector, so there might not be much to ask for. But, what is the wish list for the FMCG sector looking like for budget 20?
I think there are a couple of categories which didn't come under the ambit of GST 2.0, which logically speaking should. So I hope the budget brings in a few more categories into GST 2.0. But I think generally the government seems to be very supportive of consumption. So any FMCG doesn't need, it's not a very government controlled or government led sector. FMCG does well when there is consumption is doing well in India. And as long as the government continues to do things that boost consumption, I think FMCG will benefit.
All right, so that's the latest coming from Godrej Consumer. But now let's also talk about Tata Power, which is targeting 10,000 crore rupees in net profit over the next 5 years. And that's the exclusive word coming in from Tata Power MD and CEO Praveer Sinha. Now, talking to ET Now, he said that the target the company has set for 2030 are feasible, and the company might even outperform the stated goals. Let's listen into this conversation.
So if you see our existing portfolio of plants, whether it is our thermal plants or hydro plants or our existing transmission and distribution and also renewable, we are more than 5,000 crores of PAT last year, and we expect that this year it will be much better than that. All our core businesses are doing exceedingly well. The new investments that we are putting in renewable power, the capacity add that will happen in this year and next year. Similarly, the capacity adds that are happening in our transmission distribution businesses, all of them are adding to our overall profitability and also to our performance. And we expect that the strong foundation that we have set for ourselves, the numbers that we have said about 2030 is definitely doable. In fact, we'll end up doing much better than that.
I want to ask you once again regarding AT&C losses. That is something which has been a good model when you're saying in Odisha. Where is the scope in other states as well? And as far as here also, you think the narrowing down further?
Absolutely right. If you see in Delhi, we started with 53% AT&C loss. Today we are less than 5%. In Odisha also, in most of the discoms, in the 4 discoms, we were around 30 to 35%. We are now less than 20%, and we'll bring it down to less than 10% in the next 3 to 4 years.
And Lok Sabha has passed the first batch of supplementary demands for grants, seeking additional spending of 41,455 crores in FY26. And out of the 41,400 crore rupees sought, Centre has stated that 27,000 crore rupees is for fertilizers and petroleum subsidies. Now, this comes just 2 months ahead of the union budget. Let's listen into what Finance Minister said.
First batch of supplementary demand for grants includes 72 grants and 1 appropriation, that is for the Supreme Court of India. So the authorization is being sought for gross additional expenditure of 1,32,268.85 crores, wherein the net cash outgo or the cash supplementary is about 41,455.39 crore, of which I'll give the breakdown a bit later. Technical supplementary, which doesn't have an additional cash outgo, is about 90,812.
All right, so that's the word coming from Finance Minister Nirmala Sitharaman. But moving on, at YONO 2.0 launch, SBI chairman says that the new app is truly modern banking solution. The chairman also added that the SBI aims to double the digital bank app users to 20 crore going forward. Let's listen in.
If it is customer acquisition, we can acquire the customer at 1/10 of the cost. And I think this is a big improvement. It is not only on the somebody starting the journey on the app or on the net banking, even in the customer, when he visits the branch, the onboarding simplification helps us to reduce the time taken to onboard the customer as well as the cost saving. Today we have almost 10 crore customers on the mobile applications. We have larger number on the net banking. Some of them could be on both the channels. Our idea is that in the next two years, we would like to increase this number to 20 crores.
And as we get closer to the end of this year, let's take a look at all the major acquisitions and their details that were concluded this year. Let me take it across to Anurag Joshi, who is here with a wrap.
2025 was a very active year for M&As, and there was not a dull moment on the deal street. If we look at the biggest M&A transactions for 2025, Iveco's acquisition by Tata Motors was the biggest transaction for this year at about $4.45 billion. That was followed by JB Chemicals being acquired by Torrent Pharmaceuticals. This was the biggest M&A deal in the drug industry of $3 billion. The biggest deal in the financial services industry was Emirates NBD buying controlling equity stake of 60% in private sector bank RBL Bank. And also in renewables, ONGC NTPC Green bought a controlling stake in Ayana Renewable Power for $2.3 billion. The biggest minority transaction this year was SMBC buying a stake in Yes Bank for almost $1.6 billion. If we look at the biggest private equity acquisitions for the year, Blackstone bought Aadhar Housing for $2 billion, Haldiram Snacks Food, transactions which had been going on with a protracted delay. That got closed in March with three investors, Temasek, AlphaWave and IHC, chipping in $1.5 billion for a minority equity stake in the company, which was about 15 to 16%. New Mountain Capital bought Access Healthcare for $1.4 billion, while one of the legendary transactions in the healthcare technology space was Blackstone buying out AGS Healthcare for $1.3 billion. In the financial services, Bain Capital bought a minority stake in Manappuram Finance for $923 million. We see the biggest exits also. That was Carlyle, which sold its stakes in the IPO of Hexaware Technologies in February, and it exited with $1.1 billion. And that was followed by Blackstone's exit and sale of some of its equity stake in Knowledge Realty Trust for $700 million. And Temasek and TPG Growth, they also sold some of their stakes in Dr. Agarwal Health, and they realized $251 million from the sale. In terms of the quarterly volumes, the total volumes as of September 30 was about $76 billion of M&As and private equity deals so far. And this figure, if we also extrapolate the Q4 numbers of 20 to 25 calendar year, that may touch or may cross 100 billion. But if you look at the first quarter, was very active, almost $29 billion of M&A PE transactions. In the second quarter, $21 billion. And in the last quarter, which was in the July-September period, that was $26 billion. So the threshold for M&A and PE transactions in 2025. So that's a clear milestone that has been set at about over $20 billion in the local deal street.
All right, thank you, Anurag, for that entire breakdown. But with that, time now to slip into a very short breather. We'll be right back to talk about more stock-specific news on the other side. Hi there, welcome back to ET. Now you're watching Market Cafe, and it's time now to put the spotlight on the primary market action, which is all heated up in 2025 with over 100 main board IPOs so far. And the country has also seen its largest IPO this year, with Tata Capital raising over 15.500 crore rupees. Now, other marquee names like Groww, Lenskart, Meesho, they also debuted on D Street. Ishika is here to take us through the entire roundup of the primary market action.
Yes, right. So 2025 has been a blockbuster year for IPOs on the primary market so far. Let's talk about some of the most notable IPOs this year. We have Tata Capital, the largest IPO this year, raising more than 15,500 crores. We also have Groww, one of the most popular ones. It has raised more than 6,600 crores. We also have Pine Labs, Lenskart, HDB Financials, LG Electronics, Meesho, PhysicsWallah, and the current ongoing ICICI one. Now, the best premium, or one of the IPOs that listed with strong premiums, include HDB Financials, LG Electronics, Meesho, as well as PhysicsWallah. Furthermore, India's primary markets have mobilized more than 5.39 lakh crores so far in 2025, and going ahead in 2026 we can look ahead for more notable IPOs coming to us. More big names, popular names such as Reliance, Jio, we have Oyo, we can expect PhonePe, Flipkart, as well as NSE finally coming to primary markets to debut next year. And furthermore, Equirus Capital expects India's IPO market to raise more than $20 billion in 2026. So it would be a great season next year as well. Back to you.
All right, thank you so much, Ishika, for all that. But hang on, as India's tech sector saw major policy shifts, deep tech push in 2025. But what were the key trends in this sector, and how have the IT companies performed? My colleague Ishika joins in with the roundup. Ishika, take it away.
Definitely. So 2025 has been a stellar year for the IT sector as well. From the lows to the growth, it has been phenomenal so far. Now, especially in October, since October, we have seen quite some growth in the IT companies, in the major large caps as well as mid caps, including Coforge, Infosys, Wipro, HCL Tech, amongst other names. Now, most of the IT companies, especially large caps, traded at below their PE averages before, as in prior to October, but now they have come in turn again, and their PEs, they're finally valuable as well as reasonable as well, right? So we have even the Q2 earnings, talking about their Q2 earnings, it has been a good season for IT, quite resilient. TCS, it reported a good revenue growth as well as EBIT margins, but its PAT fell a little. We also have Infosys with a good PAT year-on-year growth as well. HCL Tech as well, Wipro, Tech Mahindra, all the big names did quite well this season, right? In terms of its Q2 performance, again, most of the companies have beat expectations and consensus, right? Now, TCS beat revenue expectations, but it missed PAT a little. Infosys beat both revenue as well as PAT, right? You also have HCL Tech, it did quite well. LTI Mindtree especially beat revenue and a big beat on the PAT margins, right? So that it's been a good and resilient year for IT, and looking ahead, hoping for the best in 2026 as well. Back to you.
Thank you so much, Ishika, for getting us all those details. But with this, let's also tell you some of the other counters that you should be watching out for. And today, Bajaj Auto will be in focus on the back of its management meet key takeaways, where Motilal Oswal has come out with a note highlighting what the management is penciling in with respect to the domestic market as well as their international expansion. Firstly, with respect to the domestic market, yes, of course, we have seen Bajaj really losing the market share, especially in the bike category, when the share actually fell from 18.5% back in FY20 to almost 16% on a YTD basis for this financial year. And not just that, there was a share in loss seen both in the 125cc and between 150 to 250 CC segments, and that was concerning. But in order to regain the market share, the company is banking on some of the new launches that are planned. There's been a new 125cc commuter bike launch likely in FY27. 3 new Pulsar variants lined up between December 2025 and May 2026 rather. So we will be watching out for that. Other than that, when it comes to the export market, yes, of course, some of these regions have been a bit under pressure, like for Africa specifically, where the share of the two-wheeler exports is down to 30% from 50% earlier. But overall, it's the LATAM that is doing very well for Bajaj Auto, as well as Asia market as well. When it comes to the export, despite the pain in Africa, the company has managed to cross the 2 lakh mark per month after 40 months of decline, and that's a positive mark and the number that the company has come out with. The Chetak launch, e-rickshaw Ricky to aid the EV leadership, and it's one of those companies that is now close to EBITDA break even in the two-wheeler EV space. The currency depreciation is also expected to support their margins going ahead. Overall, Motilal Oswal do believe that all of these positives are already factored into the valuation of the company. They continue to maintain their neutral rating with a target price of 9,070 odd rupees.
All right, so that's Bajaj Auto for you. But let's move on and tell you what's the latest that's coming on the WhatsApp privacy policy case. The National Company Law Appellate Tribunal, or the NCLAT, they have clarified that WhatsApp is required to comply with the Competition Commission of India's directions to give users greater control over whether their data is shared with other meta companies. Charu is here to get us more on this story.
So this is a very interesting case. Let's understand it in a very chronological manner. Last year in November, CCI came out with a direction against WhatsApp saying that for 5 years it will not be allowed to share the user data with other meta companies, and also penalize them for an amount of over 200 crore rupees. However, an appeal was filed before NCLAT where they said that the ban becomes very redundant, because what we can do here is that a user choice of sorts can be given to the users, and the penalty was also waived off. After this judgment, there was some discussion about the NCLAT's jurisdiction as well to deal with such cases. However, CCI went back to the tribunal and asked for a clarification. So in a clarificatory sort of a hearing, NCLAT said that what has happened here is that we are not going to penalize the company. We are not going to put a 5-year ban on WhatsApp. However, it has to give a user choice of sorts to the users of WhatsApp to decide whether they want their data to be shared with other meta platforms, and they should have the freedom to review such a choice and opt in and out of it. So what is essentially going to happen here is that WhatsApp is going to get about 3 months to comply with the directives of NCLAT and give more of a freedom to the users of WhatsApp regarding their data privacy norms that will be followed on the platform.
All right, thank you so much, Char, for getting us all those details. But with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team who put this show together. Thank you so much for tuning in.